Good afternoon, everyone, or good morning to our West Coast friends still, and welcome to today's presentation, Navigating the Future of Nonprofit Nursing Homes. My name is Alex Spanko. I am the Director of Communications for the Center for Innovation, which is the nonprofit home of the Greenhouse Project and Pioneer Network, and I'm moderating today's panel. We have a lot of people on the call, and we have a lot of ground to cover. But very, very quickly before we start, I just want to lay down a couple ground rules for today's presentation. Number one, we would love all of you to ask questions of our panel. We're going to have time at the end, hopefully about 15 minutes at the end of the presentation to do some Q&A. So please put your Q&A in the Q&A box, not the chat, in the Q&A box. Put those questions there while the presentation is ongoing. Some of us may be able to answer those questions during, in the chat box, but otherwise we will have a conversation at the end about them. Number two, a recording of today's presentation is being made right now and will be available at the end, probably by tomorrow, you will get that. So please feel free to share this far and wide with your colleagues who couldn't make it today. Go check back. Please feel free to use that recording. You will get it at the email address that you used to sign up for today's presentation. So we have three incredible panelists, well, two panelists and one panelist doing a little introduction. We have Dan Herman, who is the CEO of Ziegler. We have Mimi Rossi, who is the new Senior Vice President and Head of Senior Living Research at Ziegler. And we also have Matt Trimble, who is the CEO of St. Elizabeth Community, in Rhode Island, one of our greenhouse partner communities. So all of these fine panelists will take you through today's presentation. And to kick us off, I will start with Dan. Dan, good afternoon to you.
Great, thanks. Thanks, Alex. Alex, appreciate it and glad to be on the panel. Both Matt and I are board members for CFI/the Greenhouse organization. And I just wanted to introduce Mimi Rossi, and Alex just noted she is our Senior VP and Head of Research. Many of you knew Lisa McCracken over the years, and before that, Catherine Brode. And Mimi is our next leader of our research team here at Ziegler, and we're in that group gathers the information you're going to see her present. So we're happy to have her on board after 8 years at Caring Communities. Caring Communities, she's also a JD and a nurse that has a great background in the healthcare space, so you'll get to hear from her. I will chime in a bit as needed before we set up Matt, who's going to carry the bulk of the presentation as a operator out in the field and also a fellow board member. So Mimi, you want to go from there?
Sure. Thank you very much. I appreciate it, Dan. And today we're going to be talking about the future of nonprofit nursing, skilled nursing, and the trends in our industry. And if we go to the next slide, today I'm going to be giving a presentation. I'm going to be talking about some trends, and specifically what I'm going to be going over with you are some baby boomer demographics. We're going to talk about how the workforce is being impacted in our industry, some growth trends that we're seeing. Also, we're going to cover occupancy today, and then we're going to talk about how this all impacts skilled nursing and the services that we provide. Then I'm going to go ahead and kick it over to Matt. He's going to present on St. Elizabeth Community, what they have going on over there, and then we'll have questions available for all of you. I know Alex said it in the beginning, but there are quite a bit of slides in this presentation. They're really meaty. There's good data. It's all sourced. So I encourage you to listen, take it all in, and these slides will be available to you as a resource to take back to your communities and with your teams. So if we want to go ahead to the first slide of the presentation, what are we looking at in terms of our industry? What is coming in the next 10 years? And really, it's about people, isn't it? So over the next 10 years, we can expect to see 11.7 million seniors come into our space. So we're talking about 75 plus that population. And so that means there's going to be a demand for our services, for housing, for senior care, home community-based services, all of it. If you look at this trend line, it's going to keep coming. It's growing and growing exponentially. So what we really want to encourage organizations to do now is to think about how you're going to react and provide those services in the future, but to think about that today. We know how long it takes for a new community to be built. We know how long it takes for strategic planning to be rolled out. So this is a really important data point to hold on to and to think about as you continue to provide those services. Some other things to keep in mind about baby boomers is they're a different demographic than the previous generation. They have different preferences. And so you want to keep ahead of that and to understand what they're looking for in terms of services and things of that nature. Going on to the next slide, just a little bit more information about baby boomers. What we know about this population is that they are likely to age alone. So we call them the solo agers. Here on the slide, you see 22% don't have children. Many do not have grandchildren, over a third. So what does that mean for us and the care we're providing? Well, that there's not a lot of family around to be able to help out and provide care. So you want to be thinking about that as well. The divorce rate is significantly higher. In 2021, a survey of all divorcees, 35% were divorced in 55 plus age group. So again, this demographic, as they age, more likely to be alone, less resources available to help with the care that they might need later in life. And then to compound that, there are more likely of a chance for chronic health conditions in this population. And we also see that the likelihood of Alzheimer's is increasing. So needless to say, there will be a need and a demand for care and goods and services related to this population. Going on to the next slide. So we think about all that, and then we think about our industry. So we know that we have a demand and a need in terms of the patient population, but we have to have a workforce to be able to provide care for them. And that still remains a challenge in our industry. We see that workforce pressures are still significant, particularly among the direct care staff. The wages are pressuring profit margins, and the rate of wage increases are stabilizing, but they're not decreasing. So what this means is that staffing challenges and the reality of the workforce now is impacting conversations related to growth and how we're going to provide goods and services later, again, over the next 10 years. So really an interesting and challenging headwind in our space. And if you go to the next slide, it's all pulled right out of the headlines. So you can see, not unique just to senior living, certainly in healthcare in general, there's an issue with workforce. We have less people enrolling in nursing school. There's a complication with not enough nursing educators available right now. And then compounding into that, we have an aging population in the workforce, and we also have a neurodivergent workforce. So we're seeing more people with disabilities in the workforce. So it's a challenge. It's a headwind in our space. Going on to the next slide. So no surprise, the workforce is a challenge. Skilled nursing is an issue in terms of being able to provide that care. So what we've seen in our industry over the last 5 years is that there's been between 2017 and 2022 is a 7,200 reduction in the number of skilled nursing units among the LZ 200. So organizations are pulling back out of skilled nursing, and it's not surprising to see a decrease in the total number of FTEs that stair steps along with that decrease in the number of skilled nursing units. So there's some relief in that sense. And then going on to the next slide. Thanks. So where is the care being provided then? This is a nice snapshot to give you an idea of how we're doing in aging services. And on the right-hand column, you'll see the non-for-profit percentage, and that's the market share of nonprofit providers in these spaces and these areas of care. So where nonprofits are doing exceedingly well and outperforming the for-profit spaces is definitely in the life plan community CCRC place. However, there's been a lot of growth in the for-profit space, and I don't know if Dan, you wanted to comment a little bit about that.
Yeah, so I'll add on here two things. On for-profit, when you glance down to the white portion at the bottom, majority independent living, assisted living, freestanding memory care, just note that's just the top 31 NIC markets. It's really hard to get the data after that. So CCRC LPCs make up 1,900, about 75% of those are not-for-profit. And by definition, they have nursing when we go to talk about the nursing topic. And then where you see nursing, that is a very precise number at the end of the year, 14,933 homes, first time under 15,000. It was 16,000 over 20 years ago. And as a reminder for this group, that's approximately 11,000 in nursing home chains for profit, 900 government, and about approximately 3,000, it's 3,200 that are not for profit. About half of those not-for-profits are in the life plan communities, and about half are primarily nursing. And Matt will be speaking to that because he has an example of that. But when we get to the sale of not-for-profits, it's primarily nursing not-for-profits that have been either being disposed to the for-profit market or closing. And she'll be speaking to that in a moment. Back to you, Mimi.
Thanks, Dan. So moving on to our next slide. So all of these impact growth, growth in our industry, all these headwinds and things that we're facing. So this slide here is a proxy slide that gives you an idea of what the largest 25 systems in our space, how their growth has been impacted over the years. So, as the market changes, our headwinds and our tailwinds facing us and our challenges related to growth will change. And so you can see here in the 80s and the 90s, there was a great deal of growth in life plan communities, all units in our nonprofit space, 80s and 90s, great years. And then we had a leveling off during the great financial crisis, about 2008. After that, most of the growth from here on after is through acquisitions, affiliations, and expansions. So it's important to think about where that growth is occurring, how it's occurring. And so this is a nice tool to take a look and see how our industry has been impacted since 1980 moving forward. Next slide. This is another way to just kind of look at those curves and to understand what we're dealing with in terms of accumulative growth, 1950s to present. You're seeing that tipping off during the great financial crisis. And again, just refreshing everyone's recollection, it's through affiliations, acquisitions that most of the growth we've seen from 2008 forward. And then the next slide gets into a little bit more detail to give you an idea of just raw data. So we're going to be looking at 4 years of data here, 2019 to 2022. And really interesting, what it shows is most growth is through expansions, affiliations, and acquisitions, and only 34 new communities in the past 4 years, while at the same time, there were 91 communities closed or sold. And then if you take that and just look at 2022 alone, 7 new communities, which is great, but 41 dispositions and closures. So the data is reflecting exactly what we're talking about in terms of the trends. And, I know no surprise to anyone here. Anything to add, Dan?
Yeah, I'll add most of those disposition and closures, because this is from the Leading Age Ziglar 200, are primarily nursing. A handful of them are distressed CCRCs, but since these are multi-facility providers, this is evidence of the multi-facility providers releasing or disposing economically or functionally obsolete, primarily nursing. Back to you, Mimi.
Thanks. So moving on to the next slide. Very good. So 41, there we go. So how is this impacting occupancy? Total natural question. We did take a hit in 2021 during the pandemic. There was quite a lot of occupancy decline, but we're seeing strong momentum moving back upwards. So this slide nicely reflects that change in occupancy. And then going just to the next slide, you can see the recovery specifically here from the mid 2022 to 2023, some nice recovery in terms of occupancy, the greatest year-over-year increases being in memory care and nursing care.
What we'd want to add there, Mimi, related to nursing on the right-hand side. So you just heard us say when folks have primarily nursing, they've been disposing, but the ones that are primarily nursing are up in occupancy because they tend to be well run by our not-for-profit providers, tend to be in a position to grab occupancy, tend to have payer mixes that haven't forced them to sell. And then, as we all know, with the demographic trend and coming out of away from the pandemic, look how occupancy is up across the board. So we'll want to hear from Matt and on his payer mix and occupancy, but we have a number of clients that are bullish on their healthcare related occupancy. As we reviewed it over the weekend, we have a number of organizations that have continuums where they're healthcare centric units, which is AL, memory care, and nursing, are even up over 90% now. Back to you, Mimi.
Great. Thanks, Dan. So just moving forward, we still have plans to grow. So a part of what we do at Ziglar is we offer a CFO hotline survey. And this one was from our August 2023 hotline survey. And it asked CFOs across the country, how do you plan to grow? And no surprise, consistent with what we've been talking about this afternoon, 54% are looking to expand their units, 18%, smaller amount, looking to develop communities, new communities, and 32%, so close to a third, looking to affiliate or acquire new organizations. The next slide is a nice snapshot, just going through it all. Of course, our headwinds and tailwinds change over time. So this is a nice resource for everyone to kind of think about all the changes that have impacted our industry since the 2000 and what's led to this consolidation that we've talked about. I don't know if you want to comment on any of this, Dan?
Yeah, we really try and depict this, and we give long presentations on M&A and sponsorship transition. But you can imagine the building of pressure over the years, as you can see on the right-hand side. That's the purpose of this illustration, and how we've elevated the rank of ability to attract and retain talent. That's been improving, as you all know, in the last 6 to 9 months. But the complexity of skilled nursing, the financial pressure, where we could say poor reimbursement in a number of states, if not across the board, combined with leadership pressure and turnover, and then lender pressure. Those are all causing folks to raise their hand and seek affiliations or potentially close. So the biggest thing we'd say to this group, please don't wait too long as a not-for-profit. If you think you need to explore strategic alternatives, you could call us or any other of the players in the industry. Because when we get to the statement in a minute about selling to for-profit, if you wait too long, the only buyers are for-profit. And that we're about to comment on that on the next page. Back to you, Mimi.
Thanks, Dan. Moving on to the next slide. Thanks. So just what Dan talked about, the non-for-profit sponsorship transitions, it really shows that the number of closures among nonprofits has jumped since the onset of the pandemic. We'd love to see nonprofits going to other nonprofits. And here you can see that unfortunately some organizations close. So we certainly don't want to have conversations about end of mission or anything related to that, but it's a reality that some organizations unfortunately are facing. But they're typically ones that are nursing heavy, so nursing predominant. Again, what Dan mentioned earlier, poor payer mix that's not, holding them over, and financially distressed facilities. Anything to add, Dan?
Yeah, and some questions were out there, so I'll answer them now on the private equity question and the buyers on the for-profit side. We we get this question all the time, and we could have a long presentation on it, but the not-for-profit to for-profit, which while it's gone down some and was extremely high, was a mix of 75% nursing and 25% distressed CCRCs. And the buyer market has continued to maintain pricing from before the pandemic. And that is because within the for-profit nursing home world, I mentioned there's 11,000 for-profit nursing homes. It's evolved into multi-facility chains in almost every case, chains of 5, 10, 20, 30, 50, 60, 100. And the buyers have shifted to being from New York, New Jersey, Philadelphia, Chicago, in particular coming out of the Orthodox community. And they will tell you that. Nick is coming up in Dallas in 2 weeks, and there'll be a very large contingent from that group that's chosen to invest in the nursing home business. And then they also invest in the ancillary businesses that are serving all of the nursing homes. So it used to be linen and food service and maintenance, and now it's technology related, pharmacy, therapy, tech companies, staffing companies, and so on. And those are typically owned in, individually or in consortiums. And they are okay with the Medicaid mixes being up to 70, 75, and 80%. Again, we could have a full session on this, but it's one of the areas in healthcare M&A where the pricing has actually stayed elevated, and they're actively buying, they're cold calling a number of the not-for-profits. And Ziegler has about 40 M&A assignments right now, and about a third are not-for-profit to not-for-profit, like the left-hand side. Many of those are not distressed, but a third to 50% are for-profit, or not-for-profit to for-profit, almost always nursing. And then there's some that are for-profit to for-profit. On the private equity question, that word gets used a little too broadly, and it's a cool word to say private equity is large, venture capital is large. It's really, I'd call it institutional capital. A lot of it coming from family offices, from the folks that have accumulated wealth and from the areas that I mentioned. It's typically not official private equity firms. It's institutional capital that wants to invest in the nursing home space. And that's obviously gotten a lot of PR. So you can Google private equity or nursing home purchases by the for-profit market, and there's numerous articles on it. But the trend just continues to play out because remember, the lenders, you'd prefer not to close, and the lenders are going to force you to sell for some value, no matter what. And so when it drops below trading at what I'd call par, or not-for-profit to not-for-profit, the lenders are gonna make you take the highest bid almost in every case, and that's coming from the for-profit market. So I'll just leave it at that for now, given the time, and we're happy to come back to Q&A or elaborate in a longer session at some point. Back to you, Mimi.
Thanks. So I'll just finish it off with the next slide and then send it over to Matt. Just to some takeaways. This is a nice slide that we put in here just for the trends. You know, occupancy is continuing to rise, but the denominator has shrunk. We've had a lot of closures in the pandemic. Again, those are related to organizations that were heavy nursing and challenging payer mix. We're less than 15,000 nursing homes nationwide. Back in 2010, it was over 16,000. So keep that in mind. And we have multiple headwinds, but all is not lost. All hope is not lost. And Matt's going to talk to us about what he has going on at St. Elizabeth's. So thank you very much.
So hi, everybody. I wanted to kind of I was asked to provide, share our story, which kind of provides a real example of a lot of the stuff that Dan and Mimi are talking about here. So St. Elizabeth community in 2016 looked like this. So we had a skilled nursing facility of 120 beds. That was St. Elizabeth Home. St. Elizabeth Home was our founding facility. It was founded in 1882. So our organization has, over 141 years of caring and taking care of Rhode Islanders. We also at the time had a 133-bed skilled nursing facility located about 30 miles away from St. Elizabeth Home, which in Rhode Island is a big deal. So in total, our SNF total bed count was 253 beds. Both our SNFs had great overall census, running at about 96%. And we were carrying about a 70% Medicaid census in each facility at the time. We also operate 4 adult day health centers. We have and had then 2 HUD 202 affordable housing, one at 149 units and another at 34 units. And we had a skilled home care agency, as well as a private duty home care agency, and as well as a service providing aging life planning. We also had an assisted living. That assisted living had 21 market rate units and 48 Medicaid waiver units. And in late October of 2015, we had just broken ground on building 4 12-bed greenhouse homes. And I'll pause a little bit here and kind of tell you our story of our greenhouse journey. Our organization, myself and our CEO at the time, at this time, in 2016, I was the administrator of St. Elizabeth Home, our 120-bed skilled nursing facility, and our CEO at the time. We both became familiar with the greenhouse concept probably around 2000 and 2006. Probably around 2007, 2008-ish, I attended a greenhouse workshop in Lincoln, Nebraska at the Tabitha House, and our CEO attended a greenhouse workshop in Detroit, Michigan. When we both came back from spending some time and those workshops, it was clear that the model was great, and we really wanted to bring the model to Rhode Island. Unfortunately, the big hurdle we had to overcome was Rhode Island, like a lot of states, had a moratorium on building new nursing home beds. We spent some time visiting a lot of other greenhouses throughout the New England. We spent some time visiting the Leonard Florence Center in Chelsea, Massachusetts. We took our board and a lot of staff to see the Eddy villages outside of Albany, New York, and we took a trip to St. John's in Rochester. We also, in order to get around the moratorium, we worked with lobbyists and the Rhode Island legislature, and we had some legislation passed, which basically said that as nursing homes closed moving forward, 90% of the beds that closed would go into a pool that any existing Rhode Island operator could apply for. But they really, in that application, they had to show that they were going to build something different and very different from the status quo. So around 2010, 2011, we engaged the Greenhouse Project to work on their legacy blueprint program. So we really looked at our current facility and seeing how we could bring the greenhouse core values into that facility. And at the same time, we engaged the Greenhouse Project to start doing some financial feasibility on opening some greenhouse homes in Rhode Island. It so happened that a few facilities in Rhode Island closed during that time period. And as a result of that legislation, a pool of about 116 beds became available to apply for. So we went in and we applied for 48 of those 116 beds. There were 2 other Rhode Island providers applying for the beds. And to our surprise, we were the only applicant out of the 3 that was approved by the Rhode Island Department of Health. And I think a lot of that had to do with the fact that we were going in with the greenhouse model and a proven model. And so we got permission to add 48 beds to our existing 120 bed license at St. Elizabeth Home. So we broke ground on the houses in October of 2015. And by June of 2017, we had 4 12-bed greenhouse homes operating. And here's a photo of one of the 4 houses. Next slide, please. So, as I said, St. Elizabeth Home became a 168-bed skilled nursing facility with the 4 12-bed greenhouse homes. Our other skilled nursing facility, St. Elizabeth Manor, was continuing to operate. However, at strong census, but 70% Medicaid, and certainly the gap in the cost of care we were providing versus the Medicaid reimbursement rate was exceeding $100 a day. We were, drawing on our endowment to support the both skilled nursing facilities at a rate that was not sustainable. By August of 2017, our 4 12-bed greenhouse homes were 100% occupied, with 50% of the beds occupied by folks private pay and the other 50% Medicaid. Next slide, please. So in late 2019, given the drain that was happening on our endowment with the losses we were incurring, our board and our senior leadership team made the very difficult decision to sell St. Elizabeth Manor. Extremely difficult decision, certainly lots of meetings and deliberations, but the decision was made to sell the facility. And at the time, the existing debt on the facility was about $10 million. We hired a broker and an attorney in February of 2020, and we're set to go. And then we all know what happened shortly after that was COVID. Next slide, please. So, as the challenges of COVID and the controls of COVID started to get a little bit under control, we decided to start up the process again of entertaining offers for the St. Elizabeth Manor. Lots of interested parties were interviewed and offers were entertained, and all of the interested buyers were for-profit entities. In October/November of 2020, we did select a buyer. The deal was closed on April 1st of 2021. We sold the facility for $115,000 per bed, and after paying off the debt, the net take was about $5.2 million. So, the deliberations with the board were a lot of around the fact of, if we can't continue to run both skilled nursing facilities the way we want to run them, with providing, great staffing patterns to really deliver person-centered care. If we can't do that, then let's get rid of one. And we looked at the opportunity of the net take less the debt as sort of an opportunity to possibly have some capital to springboard into some other strategic initiatives. Next slide, please. So, kind of where we are today, obviously, COVID and that certainly put a halt on any types of strategic initiatives. Workforce issues, kind of lead us to take some pause there. But really what we're fighting today in the nursing home industry here in Rhode Island is how costs continue to increase and reimbursement doesn't really move much on the Medicaid slide. I show you here a slide of the cost centers that make up our Medicaid rate, and you can see how the average Medicaid reported cost of facilities has changed over that 4-year period. And the biggest difference being in the, the fourth category from the top in direct labor. You can see how the average cost has increased significantly, whereas overall costs in that period of time have gone up, well over 25%. Medicaid rates have moved about 8% in the same time period. And the current average cost versus average reimbursement is running at close to $70 per day. So Rhode Island has seen, Rhode Island typically used to be, it was made up, there were about 85 nursing homes in Rhode Island. They were all, out of the 85, they were for-profit, there were nonprofits, and then the majority of the for-profits were family-run facilities. Today, over 60% of the nursing homes in Rhode Island, which has decreased to probably about 75 homes now, but over 60% of those homes are now run and operated by out-of-state companies or out-of-state corporations. Next slide, please. So, is there hope? Like many members of our board always say, hope certainly is not a strategy. But, the strategy has, we're looking at opportunities at a strategic planning level, looking at things like in the senior living space. We have made a conscious effort to kind of go back on our, originally we wanted our greenhouse homes to be 50% private and 50% Medicaid. And we've had to now make a conscious effort to really try and increase the private pay census in the greenhouses. Of course, that takes time with resident attrition. And today our greenhouse homes are operating at about 58% private pay and 42% Medicaid. The other challenge we face is Rhode Island has a high penetration of Medicare Advantage in our Medicare population. The Medicare Advantage penetration in Rhode Island is about 60%. So this certainly puts challenges to our short-term rehab program as well as our skilled home care agency. The governor's budget that was released this past January certainly shows some hope. There's a 6.9% COLA in the budget for our Medicaid nursing home rates. And for the first time since 2012, Rhode Island is going to do a rearray or a rebasing of Medicaid rates based on the 2022 Medicaid cost reports. And the governor has allocated about $46 million in the budget to account for that, which should result in a decent Medicaid increase to the homes in Rhode Island, anywhere between maybe $40–50 per day. So that's our story. That's kind of where we are today, and we're very happy with the greenhouse model. Of course, it certainly attracts a private pay market. People are certainly willing to pay for the model and to travel significant distances for the model. But it certainly was an extremely difficult decision for our organization to sell our other skilled nursing facility. And I can certainly say it was probably one of the most difficult things I've had to go through in my career, especially when we had to tell the staff that we were selling. So that's our story.
Oh, excuse me. All right. Great. Thank you so much, Matt. Thank you so much, Mimi and Dan. Dan and Mimi, if you want to come back on camera, we have some time for Q&A, and we certainly have a lot of them. So let's dive right in. And I appreciate, by the way, before we dive right in, Dan, I do appreciate your discussion of private equity, because I think there's always been, I think, a bit of a disconnect between the public understanding and the lawmaker understanding of the types of private equity firms or private investment firms rather that are invested. I think a lot of that comes from, there were some very high profile cases of big, private equity firms that had been involved in the industry having a lot of negative outcomes, sort of the traditional private equity firms you think of when you think private equity. But that's not, I mean, back when I was covering the sector, 3-4 years ago now, that was kind of on the way out. Is that pretty much the same where you're not really seeing any of those big, private equity companies as you think of them in the space? I just want to clarify this because there were a lot of different questions about it.
That is correct. Private equity is a sensational term. It's an emotional, it's like saying AI, and everyone says AI today. And when AI is really about automation, and you have an emotional reaction to the word AI, unless you own NVIDIA, and then you jump for joy. Hopefully everyone understands that because it's up 15% today. And then private equity is the same way. So there's no question that the growth of for-profit senior living, knowing that not-for-profits created it, or for-profit nursing, is a significant trend and has implications around a regulatory and quality, et cetera. The items that Ash leading age, and this is primarily a leading age audience on this phone, but there's a large number of consultants and others that serve the for-profit side that think very highly of certain operators. So it's like everything else, just like the star rating system. You can go from very good operators to very poor operators. I do think the star systems brought more visibility to the awareness for those operators to know where they rank, and they talk about it and they're aware of it. But as a general rule, I'm tying this into the investment side, they will tell you when they buy a not-for-profit community, and Matt, you can comment on what you believe happened at yours, where he had an example. They will drop the staffing almost immediately. It's a common phrase from the for-profit community that the day they buy a not-for-profit nursing home, that they'll save $1 million when they open the doors. And they do that from reducing staffing, so they tend to drop to 3 and 2 stars, not all the time, and tend to have other savings. They do try and make it up with efficiency and technology today, real time in 2024. That didn't used to be the case, even here in Chicago, where I live, and we have a large number of for-profit operators. So their backing comes from a consortium of investors, and they actually pool their own capital. So every time there's a purchase, it often has 2, 3, 4, 5 partners. You just don't know how many partners are behind that, which is why, Alex, did you see the pronouncement a week or 2 ago, where there's a push to learn who are the investors and owners of the for-profit sector, which is not a public company sector. Ensign's public, but generally speaking, you have some REIT ownership and then a lot of this private ownership. And then the other thing that came out, you heard me just say ancillary businesses, and some of you, I'm sure, are studying this, is wanting to understand the ancillary businesses, who owns it, because what they're getting at is the theme of they want to make sure there's no reimbursement, i.e. Medicare fraud going on. So the scrutiny is going to come up in the area, and I'm sure we'll go on and on, but the mega trend is playing out that our not-for-profits are rotating to continuums, the CCRC LPC word, but gradually rotating to continuums with nursing on the campus and releasing freestanding nursing in examples like Matt gave.
First of all, thank you, Dan, for that very comprehensive answer. It is, I think emotion is something that is true. I think people forget, especially when they're in the industry for a long time. A lot of people have experiences with nursing homes and, work with people who've had experience with nursing homes where they are emotional about these topics. And, I don't blame anyone for being so, but I think having a negative, or I'm trying to figure out what I want to say here. Having a clear idea of what private equity really is and what it isn't in the space, I think, is a really good starting point, because I think in a lot of cases, we don't really have a solid grounding of what we're actually talking about when we're talking about these trends. Matt, we did have a question, and this is probably something Mimi and Dan can jump into, but, selling to a for-profit, do you have any insight into, are you still in touch with that community that you used to serve? Do you have any insights into, maybe how things are going there? And then I think maybe in general, Mimi or Dan, after Matt answers, we can kind of zoom out to see what are some of the trends that you see when a nonprofit exits to a for-profit.
Well, as many of you probably know, Rhode Island is a small state. The whole 6 degrees of separation just doesn't exist in Rhode Island. It's more like 2 or 3 for sure. So yeah, there's, obviously, all the SNFs know each other well. The administrators all know each other well. The way we looked at it is no matter what the buyers tried to tell us in terms of they were going to maintain the staff and maintain the staffing levels and all that, we just knew that it's just not possible. It's not possible given, when 70% of your revenue is Medicaid, and the gap in cost and care, and reimbursement in cost is significant. We weren't surprised to hear that our staffing levels that we left them with were reduced significantly.
And then, Mimi or Dan, are there any other sort of bigger trends? I know I appreciated, Dan, you issuing kind of a warning, because I think everyone on this call, and again, I want to acknowledge that we got a question that acknowledged that, nonprofit doesn't necessarily automatically mean better. Obviously, there are good nonprofits, there are maybe subpar nonprofits, just like there are good for-profits and bad for-profits. It's all a continuum. But I do know that there's a lot of, especially on the regulatory level, on the policy level, and on the media level, I think nonprofits going to for-profits causes concern for a lot of obvious reasons. So are there any other trends, Mimi and Dan, that you tend to see when that happens?
Mimi, go ahead, and then I'll follow you. Do you have anything you want to add?
I don't have anything to add, Dan. You can go.
Okay, and Mimi used to work at Caring Communities, so we know, and that's an insurance consortium of about 80 not-for-profits. So that's just one example of a group getting together to focus on quality and risk, that they would make the case that they feel like their risk scores are better just by focusing as a collection of not-for-profits. Then leading age, all the leading age state associations bring the focus. But you're correct. You'll get certain folks that'll say not all not-for-profits are great operators. But as a general rule, the not-for-profit advantage for the full continuum or just nursing, AL, memory care is significant if you can deploy it, which is being able to tell your story to attract management and staff, a great story, being able to have volunteerism that many of you have at your homes, especially if they're faith-based, being able to fundraise. And so on the trends, as she highlighted, when we talked about the leading age Ziglar 200, we do know that as organizations grow in size and scale, and Matt, I'll put you on the spot in a sec when you come back on, just note what your revenue base is, but you're the largest provider in not-for-profit in Rhode Island. As people develop larger revenue bases and multiple locations, are able to add specialty positions. So when people ask what's the benefit of scale besides purchasing and consolidation of debt, being able to add specialty positions within the system, head of clinical, data analytics on healthcare, whatever it may be, we do see our multi-facility providers, especially if they're regionally clustered, being able to bring greater elements of quality and definitely better economics for themselves. So that is definitely a trend. It is hard to be out on your own in today's payer mix, and I'm glad Matt highlighted Medicare Advantage. So we always got to remember it's hardly any private pay. Medicare, but we're up to 50% Medicare Advantage in the country and 60% in Rhode Island. And the Medicare Advantage average reimbursement, Matt, when you come back on, remind everyone, is it 80%? Is it 85%? But
yeah, Rhode Island is about 75.
75. So the reimbursement pressure is just flat out profound. And I don't see it changing. Some people don't like to use this term, but the freestanding nursing home, the for-profit nursing homes that are 75% Medicaid, it's de facto long-term care insurance. We have until we have long-term care insurance policy, that dual eligible seniors end up not being able to afford our product in IL, AL, or memory care unless there's Medicaid reimbursement. So their first entry point into a community is in skilled nursing as a dual eligible, and then they tend to come in with more chronic conditions. So this pattern will just continue unless the model changes. But our multi-facility providers are attempting to do the best job they can on alternate models and risk-based models and ISNPs and so on that we could spend more time on.
Matt, I did want to hit a question for you specifically, and then I'll have a follow-up about Medicare Advantage. But can you walk through some of the, what are some of the advantages of the greenhouse small home model, maybe compared to the legacy home? And, kind of get into a little bit of the financial viability there. I know you had mentioned that there's a little bit of change in the payer mix, but if you could kind of elaborate on that, and then I have a follow-up on Medicare Advantage.
Well, I always kind of throw caution to the wind when I make this statement, because I know someday it's going to happen. But, our greenhouse homes have been operating since 2017. Occupancy is off the charts. Private pay census is good, but I have yet, as president and CEO, I have yet to get a phone call from a family member with a complaint in our greenhouse homes. And, that's astonishing to me. And, I think it really speaks to, it's not that we don't make mistakes, but I think the relationships between the elders that live there and the families that visit with our staff, I think those relationships are so strong. Family members just bring it right to the staff. Staff figures it out, corrects it, and fixes it. I could give you a whole presentation on why I think the model's great, but I think if there are any other administrators or CEOs on the audience, I think that would resonate with them a little bit. Certainly, yeah, I mean, the staff satisfaction is high, resident satisfaction is high, family satisfaction is high, and occupancy and census is great.
Yeah, I mean, I think it's something that it's an issue that we face, when talking with providers and I completely sympathize, empathize, whatever word you want to use. If you're a provider, especially in this market, especially with all of the other headwinds you have, the workforce challenges, reimbursement issues, changing demographics, all of these things. I understand why an organization may look at something like a greenhouse transformation as daunting. I can't look 2, 3, 4 years ahead where these benefits really start to pay off. I know a lot of organizations are really just trying to make it through the next quarter, trying to make it through the next 6 months. So I have sympathy to that, but I think that's a very powerful way to frame it, Matt, where you're trying to look at the long haul. I think everyone is generally in agreement that maybe, maybe not everyone, but I think one of the patterns you're seeing is the country has a lot of nursing home beds, many of which are not being used. We have a lot of great advances in what can be done at home. And just to clarify to everyone out there, at CFI, we love home health, we love HCBS, PACE programs, assisted living, independent living. We're firm believers that there needs to be a full continuum of care. But there's always going to probably be a portion of people who require, maybe a more intensive level of care. Also, always a proportion of people who would prefer to receive care in a communal setting. Home can be very isolating for people who don't have family support networks, people who are aging alone. Mimi, you mentioned the solo agers at the beginning. Not to say that if you want to be a solo ager alone at home, if that's what you want, that's what you want, you should be able to get that. But there are people who prefer some kind of communal option. And so I think that's a good way of framing it, Matt, is how are you setting things up for longer term success? How are you setting yourself up to be that provider of choice in a market where maybe there's less global demand for nursing home beds, but people want, privacy, people want to really know their caregivers. So that's a good way of really looking at that. And then I wanted to follow up with Medicare Advantage. And this is something we talk about a lot internally too, is do you see from a post-acute perspective, do you see potential for Medicare Advantage to maybe provide some support, whether it's referrals or investment in a greenhouse model as a post-acute solution? And Dan, feel free to jump in afterwards as well.
I don't see that in our state. Not in the least. I mean, I think our Medicare Advantage, one of our primary Medicare Advantage payors just recently raised nursing home rates, and it was the first time we've seen an increase since 2012. So think about that for a second.
Dan, do you see because in theory, this is something that we've definitely talked about, internally. In theory, a Medicare Advantage plan wants to get the most bang for its buck in a post-acute scenario. They don't want as much of a risk of infection, which we know, during, I think I see the comment coming in actually as I'm saying this, during the pandemic, there are substantially fewer COVID infections and deaths in greenhouse homes because of both the private rooms and the consistent staffing and the, smaller care teams caring for discrete individual groups of individuals. So not only private rooms, but fewer people coming in and out of each home. So you would think on paper, for a Medicare Advantage plan, they might see some benefit in either providing rate increases, any kind of financial support, but doesn't sound like that's happening in Rhode Island. Dan, is that happening anywhere? Is that what Medicare Advantage plans are thinking, or do they not see it that way? No, you're muted, I believe.
Talk and ask as much as we can everywhere we can. And it definitely happens at state and local levels. So we all got to keep that in mind. There's not sweeping national trends, but I agree with Matt. We don't hear them being sympathetic to the senior living provider. What we hear, and we have a lot of clients in St. Louis and they have a major MA penetration. And you'll hear CFOs say, I have to threaten that I'm going to drop that insurer if they push it any further, and they get in battles like that. And it's less about the quality. I think, as Matt alluded to, the greenhouse model and other forms of small houses and resident-centered care is principally in not-for-profit senior living in these beautiful, wonderful continuum settings or freestanding. And it's incumbent, and we're board members, and for us to keep telling the story, and eventually it'll break through to someone who will understand the quality and the economic benefit. So I mentioned the word care models, and that sounds generic, but there's a number of our providers working on alternative care models, recognizing these massive cost pressures. Now, the care models might start in assisted living and memory care or in independent living on risk-based models, value-based care. You have Curana out there, you have LifeSpark out there. Many of your Ohio providers are making big advancements on this. It's a very innovative state. We have a lot of those folks as clients. So keep your eyes out for these innovative models. And at some point, they will partner with insurers and figure out how to reward quality and recognize that this the money-losing aspect of the nursing home model cannot sustain. One of the questions quickly was, is private pay going to push Medicaid out? And the answer is no, because nobody wants to pay private pay at $400 and $500 a day. Matt, what's your private pay rate if somebody went into Med A or into regular custodial right now and at your organization?
About $460 a day.
$460. It's just
a day.
What people are going to do, and my parents are living this right this second. They're going to bring in private duty nursing home care into their independent living or assisted living unit for as long as they can before they go to pay private pay, which is why the for-profit nursing homes will tell you they're all Medicaid and then Medicare or some type of step-down unit, and they basically have no private pay. So really what's happening, and by the way, the nursing home's not going to go out of business. People think that's going to happen. You heard Mimi say 16,000 down to now call it 15,000, but 11,000 are for-profit and it's 75% Medicaid. So we need the states are going to have to get involved, and as we all know, it's breaking the back of the states. So innovative models are going to present themselves in some way to stop this train, because the dual eligible folks are going to break the back of all the states. So this train is coming, but it's going to happen organically in each of the states, and then there'll be models we can mimic. I can't understand why there's not more Medicaid-supported assisted living. Illinois, was one of the progressive things we actually did, has this SLIF program, but only X number of states have Medicaid-supported assisted living, which would be one way to take the pressure off the costly nursing home model. And the greenhouse can play into that.
We've definitely had some conversations on the state level with some folks who are interested in doing some supportive living type things, which is what the SLIF is. Correct? That's supportive living. Yeah. Correct.
Supported living. Can we ask Matt to comment on the economic model? Some of our peers are asking. We get pushback on that when people say I can't sustain it. But Matt, you and 100 other not-for-profits have made it work. Just want to highlight that for the group.
Yeah. I think, it certainly doesn't cost more to operate. It, you know, I think you measure that by census, and, you know, I think, you know, to have uh, a group of homes, right? And, you know, almost 60% of them private pay, I think speaks for itself. And I know that's not the case with every greenhouse operator out there. But you know, certainly we've seen, you know, people with the means are willing to pay for this model. It's highly desirable.
And we do have, in addition to that, we do have some momentum on the state level. You know, Dan, you mentioned Ohio. Our colleagues at Otterbein were able to help implement a rate add-on for private rooms, small homes. That exists in Arkansas as well, and it's something that we at the national organization are really active with, trying to work with as many states as we can, because the goal is to not have this be, you know, a private pay model. The goal is for this to be the standard of care everywhere. And it's probably going to be possible, especially as we try to move more care out of the nursing home in general, try to fund more, you know, alternatives, so that what remains for people who, you know, need or prefer to live in a communal nursing care setting, you know, there could be a bit more funding available on that end. We are at the top of the hour. So in order to be respectful of your time, of everyone's time, I want to wrap up. But before we go, Janet, we have a couple of promotional slides we're going to show you. If you really liked today's presentation, we have a lot more programming coming up, including, so we're sharing the screen here. Our conference, the Center for Innovation Conference, it's coming to Grand Rapids, Michigan, November 11th to the 13th. We're going to have a lot of greenhouse operators, Pioneer Network people there. If you're at all interested in new models of care, we're going to be tackling it from all angles, you know, clinical, financial, operational. So please save the date. We'll have some more information about registration then. Next slide. Coming up in a couple weeks now, we are doing a development workshop at our partner community in Little Rock, Arkansas. These are the greenhouse cottages of Poplar Grove. It's actually a for-profit operator, Southern Administrative Services. John Ponte, who's the managing partner over there, is also on our board. With the help of a small rate increase that was implemented actually all the way back in 2009, John Ponte and Southern Admin have been able to build more than 50 greenhouse homes across the state. They will only build greenhouse now, and crucially, they get their financing for their projects with 100% Medicaid pro forma assumption. So this is an example of a Medicaid funded product in greenhouse homes happening all over the state of Arkansas. So if you'd like to see it for yourself, we're having an on-site workshop there. Really innovative, really cool stuff. And finally, one last slide. We have another webinar coming up in 2 weeks about financing innovative elder care projects. We're looking at sort of HUD, USDA, banks, kind of the different flavors of financing. And part of that, in addition to kind of the higher level, we'll also have Patty Moore, who's the founding member of Navigator Homes of Martha's Vineyard, a project that got about $53 million in loans backed by the USDA. Which you wouldn't think necessarily funds greenhouse or nursing home development, but they do in rural areas, which is especially important in a place like Martha's Vineyard. The other cool thing about them is they're building workforce housing to go alongside the greenhouse, because as you can imagine, getting people to live full-time on Martha's Vineyard, not a very easy housing market. So tune in. That's going to be March 6th. It's a Wednesday at 3 p.m. Eastern. So I'll see you all back then, hopefully. I'd like to thank our guests, Mimi, Matt, and Dan. Thank you so much. One quick reminder, you will be getting a recording of this as well as the slides, so check out the email inbox for the address you used to sign up today. Thanks, everybody, and thanks, Janet, behind the scenes, making all the slides work. Have a great rest of your day, and we'll see you next time.
Thanks, Alex.
Thank you.
Appreciate it.
Thanks, Alex.